Hello and welcome to Business 360. I'm Shireen Bhan. The headlines that we're tracking for you this evening.
I want us to be the co-pilot for India as it really takes advantage of AI, creates, in fact, its own AI products across all of these sectors and exports them to the world.
Microsoft CEO Satya Nadella, bullish on India's tryst with artificial intelligence, expects businesses led by AI to make up 10% of the economy when India hits the $5 trillion mark. Adds AI is powering a shift from the era of information at your fingertips to the era of expertise at your fingertips. That's a CNBC-TV18 exclusive. The Sensex and the Nifty end a volatile session with marginal gains. Mid-caps outperform. Financial stocks find a firm footing as PSU banks lead the charge. A CNBC-TV18 poll expects the Monetary Policy Committee to hold rates steady on the eve of the MPC. 100% of participants polled expect a status quo on rates and stance. Hamas proposes a three-stage ceasefire plan, calling for a complete withdrawal of Israeli troops in exchange for hostages. U.S. Secretary of State Anthony Blinken heads to Israel after visiting Saudi, Egypt and Qatar to discuss the ceasefire proposal. The government is likely to soften its stance on retrospective GST demand from real money online gaming companies. Sources say the centre sees merit in the argument that companies will be unable to meet the unrealistic demands. That's CNBC-TV18 exclusive. India is likely to oppose European Union's carbon tax at the WTO ministerial in Dubai at the end of the month. Government sources say that trade barriers cannot be erected under the guise of sustainable development. Insurance regulator okays the Axis-MaxLife deal. This allows Axis Bank and its entities to acquire an additional 6% stake in the insurance company for a fund infusion of 1,612 crores. The Competition Commission is yet to greenlight the deal. The budget session of Parliament is extended by a day to Saturday. The government is likely to table a white paper on the state of the economy during the 10 years of the UPA regime. More than 70% of Indians are optimistic about India's potential to become a developed nation by 2047. That's as per a survey by Primus Partners. 58% believe that the pressing need is to provide roti, kapra and makan to large chunks of the population. And Virat Kohli is all set to end his 8-year association with Puma. Sources say Kohli will join as the brand ambassador of a homegrown company in which he owns a stake. Exclusive details coming up. Well, let's start with the big CNBC-TV18 exclusive newsmaker this evening. Microsoft CEO Satya Nadella completing 10 years at the helm of the tech giant this week. Nadella is in India for his annual visit and he sat down with me for an exclusive interview. He believes artificial intelligence can be a key growth driver for India. In fact, Nadella expects businesses led by AI to account for 10% of the economy when India's GDP hits the $5 trillion mark. Nadella wants Microsoft to be the co-pilot for India as it moves forward to take advantage of an AI era. Here's an excerpt from my exclusive chat with Satya Nadella.
We're no longer just talking about AI. I mean, some of the use cases I talked about this morning, I saw from customers, commercial customers, non-profit organizations. I think this is the fastest rate of diffusion of anything new I've ever seen. One good thing about this generation of AI is it actually reduces the learning curve, not increases the learning curve. So even for somebody displaced mid-career, you can pick up new skills faster, easier. So that's sort of one. The second thing it does is it's sort of, if the previous era was about information at your fingertips, I think of the AI era as expertise at your fingertips. Yes, I'm not at all saying that there is not going to be displacement. Like with any new technology, we've seen it. But I also am very optimistic that we even have both the policy tools and the actual tools to help us manage this transition in a net positive way for even a country like India.
What is it going to mean in terms of investment, Satya? At a company level, let's talk about Microsoft. You did talk about disproportionately investing in building out AI across your tech stack. And for the industry in general, what are we talking about in terms of investments?
Yeah, so for us, we are obviously very, very excited by what we're seeing in India. At the end of the day, we are putting our capital, we are building out our own data centers. We have 4 regions. We have, we'll keep expanding that. We're investing in our own people here, both India as a source of human capital that's producing products for us all over the world, but also us helping customers, the IT services companies that serve the world from here, equipping them with the latest and greatest. So that's, I think, I would call it the core of what we do. But beyond that, I would say the investment here is, if you have a new general purpose technology, India has a tremendous opportunity to use it in a broad sectoral way, public and private sector, across every industry, healthcare, retail, energy, what have you. We want to make sure that we are there. You know, I'd like to tell you, we talk a lot about co-pilots.
Yes.
And I want us to be the co-pilot for India as it really takes advantage of AI, creates, in fact, its own AI products across all of these sectors and exports them to the world.
Do you have a number, though, of what it will take for Microsoft to invest here in India, and also what Indian companies will need to do in terms of further investment?
The economic data I've seen is, if Indian economy is going to be, like, say, 5 trillion, the AI-driven part of it could be something like maybe 10% of it, maybe 500 billion of it. So what we are going to do is, and all of that is being powered by things like cloud compute with these frontier models, open source models, small language models, and so on. And so our capital investment and human capital investment will really fit into that. So the way I think about it is, if Microsoft has X revenue inside a country, that means there needs to be 99% more revenue created because of the output of compute. And so that's kind of how we'll invest.
Well, that is Satya Nadella, and you can watch more of that interview right through the day on CNBC-TV18 on our show Global Dialogue at 7:30 p.m. and 9:30 p.m. right here. On to the market action of the day. The Sensex and the Nifty ending the day flat, giving up early gains in what turned out to be a volatile session. The Nifty managed to remain within striking distance of the 22,000 mark. Financial stocks managed to buck the downward trend, largely thanks to PSU banks. Mid-caps also managed to outperform the blue chips, with the index gaining over 350 points. The proposal to extend trading hours for index futures has received an in-principle approval from the Association of National Exchange Members of India, or ANMI. Now, sources say the Brokers Industry Standard Forum, which comprises of several associations, will send a formal letter to the market regulator SEBI supporting the extension in trading hours. The National Stock Exchange sent a proposal to SEBI last year to extend the trading hours for the F&O market. SEBI will take a final decision on the matter. Well, the big event, shifting focus to the RBI monetary policy. A CNBC-TV18 poll expects the Monetary Policy Committee to hold rates, while 100% of participants polled expect status quo on rates as well as stance. Ritu joins us now to take us through the details. Ritu, RBI Governor Shaktikanta Das, in his conversation to us, made it very clear that there is no movement on rates anytime soon, and that's what the poll seems to indicate.
Absolutely, because, we're nowhere close to that 4% mark that the RBI wants to target before it gets to, shifting this cycle. But I'll start with the backdrop, because it's an interesting time. The policy is coming just a week after the interim budget. We had the government sticking to the path of fiscal consolidation. And you also had them lowering the market borrowing for the coming fiscal. So positive on both ends. Growth seems to be holding up. Core inflation has declined to sub 4% levels. The US Fed has ruled out any rate cuts in March. And the global economy overall seems to be heading for a soft landing. So no big reason to cut or hike rates at this point of time, which is why the street's going to focus on liquidity over rates in this policy. And that's because liquidity conditions have persistently remained tight since the last policy, with some moderation that we saw recently. So how much liquidity can RBI provide? How will it provide that liquidity through VRR or other routes? What instruments, any action, any direction on this front is going to be important. On the numbers itself, the MPC is expected to leave the repo rate unchanged, and this is for the 6th consecutive time. 100% of our respondents saying that, there's no real justification to cut rates even now, because inflation, like we said, is closer to 6% than the 4% target. Now, all of the respondents said that the MPC will maintain the stance at withdrawal of accommodation at this point of time, but I must warn that there are some economists on the street that are pointing out that there's a very small chance of the stance being shifted to neutral, with, what we're seeing with the interbank call rates already coming below repo rates. 90% of our respondents also expect the tone to remain absolutely even this time around, some even expecting the governor to sound mildly dovish, given that, there's some comfort that the RBI has with the current growth inflation dynamics. So when is the cycle going to turn? That's a big question, but all of our respondents said that window may not open before the June policy. Half of them are actually expecting it in the second quarter of the next financial year, and 40% in the first quarter. On the CPI front, unlikely. RBI will tinker with the estimates as of now, unchanged at 5.4%. Even for the coming quarters, no change is expected. On the growth front, currently at 7% for FY24, the majority expects it to be left unchanged. Some are expecting RBI to align closer to the NSO level of 7.3%. But that's as far as the policy is concerned. Of course, we're also going to watch very closely for any comments from the governor on the Paytm issue in the press conference.
Well, let's see if this turns out to be a Paytm MPC press conference. Many thanks, Ritu, for joining us. And speaking of Paytm, shares of Paytm parent 197 Communications up 10% today, hitting the upper circuit, extending the previous session's gains. A large block deal saw 21 lakh shares worth 103 crore rupees change hands. Sources say Paytm's founder and CEO Vijay Shekhar Sharma met with Finance Minister Nirmala Sitharaman yesterday. It was a short meeting. This comes days after the Reserve Bank's crackdown on the Paytm Payments Bank. In earnings, FMCG major Nestle posting a strong performance in the December quarter, and that is despite external challenges. Profits missed estimates owing to a one-time service cost of 107 crores. Revenues also missed expectations marginally. However, the domestic sales grew by 8.9% with margins meeting expectations. Well, here's a CNBC-TV18 exclusive. The government is likely to soften its stance on retrospective GST demand notices to online gaming companies. Now, sources have told CNBC-TV18 the government sees merit in the argument that a company cannot pay unrealistic tax demands. Timsy is standing by now with more details. Timsy, the notices that were sent out to online gaming companies were to the tune of 20,000 crores, 28,000 crores, and it did put an existential question mark on the future of these gaming companies itself. Is there a change of heart within government?
Well, sources are indicating to us that the government is likely to soften its stand on the retrospective GST demand notices that were sent to online gaming companies. Government has realized, or there's a sort of a realization within the corridors of North Block, that the existential issue of gaming companies, that if they have to pay GST demands that were raised between July 17 till March 23, are they realistic or not? Also, what we are given to learn is that the government is likely to have sought a legal opinion on what could be a way out of the tussle with the online gaming companies that the government is facing currently. And it sees some merit in the argument of the companies that a company cannot pay an unrealistic demand which is as high as several thousand crore rupees. Remember, the matter related to GST demand on online gaming companies is being heard in Supreme Court. An SLP has been filed by the government against the Karnataka High Court order in the Gamescraft matter, and all the cases pertaining this particular issue from various state high courts have been now clubbed under this particular matter. And to be precise, what is the quantum which is at stake? Well, online real money gaming companies have received 71 show cause notices worth 1,12,332 crore rupees in FY23 and 24. And government had challenged this particular Karnataka High Court order, which was pertaining to the 21,000 crore rupees demand just in the case of Gamescraft alone, where Karnataka High Court had quashed this demand. So let's see what happens in the court, how the tussle between the government and the companies actually turn out to be, and what is the final outcome. But yes, as of now, some softening of stand is visible. Back to you.
All right, Timsy, many thanks for joining us. Insurance regulator, the IRDAI, has approved the Axis-MaxLife deal. The regulator has allowed the bank and its entities to acquire additional 6% stake in the insurance company for a fund infusion of over 1,600 crores. Yash standing by to take us through the details and the contours of this deal with the implications. Yash.
Well, Shireen, Max Financial Services, the company reported its third quarter results post-markets yesterday. The numbers weren't great. They missed expectations. Still, stock managed to close above that 5% mark in today's trading session. And that's largely because of the approval which came from the insurance regulator for the deal between Axis Bank and Max Life. As far as the transaction is concerned, Axis Bank will be allowed to acquire another 6% stake in Max Life Insurance, taking its total holding in the life insurance subsidiary to about 19%. Now, this particular transaction will happen through issuance of about 14.25 crore shares from Max Life side to Axis Bank, and Axis Bank against that would infuse about 1,600 crore rupees into Max Life Insurance. This deal is particularly very positive for Max Life Insurance and Max Financial Services, largely because of four important reasons. the deal happens at a higher valuation as compared to the first tranche of the same transaction. Second one, MaxLife gets growth capital for the next 18 to 20 months, the 1600 crore that we're talking about. Also, MaxLife's solvency, that goes up by nearly 40%. Also, MaxLife gets a strong and a large distributor of its insurance products through Axis Bank. That was one piece of positive news. The second piece came very close to market closing today. The January life insurance numbers, which came in very, very strong for Max Life Insurance again.
All right, Yash, appreciate you joining us. That's Yash Jain there. Time for us to head into a break. But up next, Virat Kohli all set to end his 8-year association with Puma and back a homegrown company instead. Find out more when we return. Well, the U.S. National Transportation Safety Board has submitted its report on the Boeing 737 MAX mid-air blowout of the emergency door panel. Now, the report says that 4 bolts on the door plug that prevent upward movement of the plugs were missing before the incident happened. The bolts were removed for repair work in August and were not refitted again after completion. The NTSB report says investigation will continue to determine what manufacturing documents were used to authorize the opening and closing of the door plug during the repair work. Now, India is likely to oppose European Union's carbon tax at the WTO ministerial in Dubai at the end of the month. Government sources say that trade barriers cannot be erected under the guise of sustainable development. Abhimanyu standing by now to take us through the details. Abhimanyu, what is India's position likely to be?
Well, India is likely to reiterate its opposition at the WTO for trade barriers being disguised as green or sustainability measures. What sources have referred to are resolutions from previous COPs, which had also said that measures taken to combat climate change should not cause arbitrary or unjustifiable discrimination. And in absence of any explicit carbon price in India, there are concerns that the deforestation regulation in Europe with a cutoff date of 31st December 2020 may increase the compliance burden and also may impact exports from developing countries, including India. India's opposition is also likely to extend to measures like the CBAM or the carbon tax of Europe, which is going to impact the industry. As far as the government sources are concerned, they have indicated that it's going to impact India's industry and is also possibly going to cause inflation in Europe. However, sources have also indicated that the challenge is also being looked upon as an opportunity for the industry to benefit in the long run. So clearly, a plethora of issues are going to be discussed at the WTO in this regard, and carbon tax, of course, in all likelihood is going to figure as far as India's discussions and deliberations are concerned.
Right, Abhi, thanks very much for joining us. Virat Kohli, all set to end his 8-year association with Puma. Sources say that Kohli will join as the brand ambassador of a homegrown company in which he owns a stake. Mangalam is standing by with the exclusive details. Mangalam, so Puma gives way to whom?
Puma gives way to Agilitas India, Shireen. You know, it is an interesting, iconic partnership that ends right now. Virat Kohli, what we understand from sources, has decided to move on, terminate his deal with Puma India prematurely. Remember, the Puma India deal that was signed in 2017 worth over 100 crores was for about 8 years, and turns out that maybe Virat will be terminating that. And the reason why he does that is he will be going as the brand ambassador for Agilitas Sports Private Limited. Now, have you heard of this company? Perhaps not. Well, because it is a company that was founded in the last 1 year itself. And surprisingly, Agilitas was founded by former Puma India MD Abhishek Ganguly, who left Puma India last year itself. So one partnership ends to support the other partnership, which was between Abhishek Ganguly and Virat Kohli himself. Agilitas, of course, was also funded or raised funds by Nexus Ventures to the tune of about 100 crores in December 2023 itself. And Virat not only will join as, the brand ambassador, but we understand will also hold some equity in Agilitas, which will create athleisure and sportswear for India itself. So from a global brand, Virat moves on to a local manufacturing, local sportswear company, terminates the deal with Puma. But under Puma, with Virat, Puma has actually become India's largest sports athleisure company, beating the likes of peers like Nike, Adidas, etc. So truly iconic partnership. The first one that crossed that 100 crore mark in a deal size ends prematurely for Virat to go to Agilitas with Abhishek Ganguly.
Well, agilitas it is, the new innings for Virat Kohli, so to speak. Mangala, many thanks for joining us. With that, it is time for us to wrap up this edition of Business 360. But before we go, we're excited to announce that CNBC-TV18 is back with the second season of India's largest campaign on gender parity. Join us for the launch event of CNBC-TV18's Future Female Forward, the Women's Collective, with top leaders, influencers, policymakers and trailblazers all under one roof, charting a path towards bridging the gender gap. The launch will be live from New Delhi, Saturday the 10th of February, 5 p.m. onwards, right here on CNBC TV18. It's going to be a special and a spectacular evening. Do remember to tune in, join the conversations. For now, thanks very much for watching.